Welcome, and thank you for tuning in to the American Investor Show. Please click subscribe if this is your first time listening. From trader and CEO interviews to breaking news about companies you won't hear anywhere else, nobody does a better job at keeping you in the know when it comes to penny stocks. The term penny stock generally refers to a security issued by a very small company that trades at less than $5 per share. Penny stocks are extremely risky, yet they offer rates of return on investment not seen anywhere else. The host, guest, and callers are not registered financial advisors licensed by any government entity, and therefore, the following should be considered entertainment. The host, guest, and callers disclaim all liability in the event any information, commentary, analysis, opinions, advice, and/or recommendations prove to be inaccurate, incomplete, or unreliable, or result in any investment losses. Before investing in penny stocks, you should consult a professional to determine what strategy may be best for your individual needs. Now, without further ado, your host, LaSalle Anungu.
Yes. What's going on, everybody? It's your boy Sal back in the building, man. You already know what it was today, the Fed coming out. And, we sitting in the chat room there at Black Box, listening to the people. Shout out to, again, everybody who's joined us for the free 5 days on blackbox.com, enjoying the challenge. We had another 100% gainer today on puts in Z. It was Zillow. And great trade on that today. But we finally got the news at around 2:15-ish, about 2:15-ish, 2:10, that the rates weren't going down. And I had a feeling that it wouldn't happen, but I left the door open on my last show because, you know, when we're talking about the master Decepticon, I mean, he's going to get his way. He's going to get his way. All week, he's basically been threatening to take this man's job at any moment. I can't imagine working for somebody like that who you just feel like, you know, he's going to just fire you at any moment. And by the way, Jerome Powell, I did some research on Jerome before the show. This guy's worth like 120 mil, bro. This guy's worth like 120 mil. And, you know, he goes on TV and he's just so humble and, you know, talking about the righteousness of the Fed. This guy's sitting on 100 mil. You know? Crazy, bro. But they left the door open at the meeting as well with the kind of language they used, right? And so in the meeting, he talked about how they feel like, you know, growth is continuing and that they are being sensitive towards, you know, the actions that are happening throughout the macro economy. So they're sensitive to it, meaning that if things get bad, we're going to jump and save you. That's basically what he said today. And that's why we didn't see a huge sell-off. We didn't see a huge sell-off throughout the day. Now, if you were really watching the chart, though, when it came out, there was this, you know, go spike to the bottom. You know what I mean? It was just like, oh, shit, they didn't cut. Boom, I'm out. But eventually people got to their senses. And again, they read what they said in the meeting. The minutes are what they call it. And it looked favorable that if things start to turn around, that rates would eventually get cut. So yes, for those of you guys who are all about the price action and you're not about the fundamentals, then sure. I mean, yeah, you know, stay on the long side. Stay as long as you want. All right. I don't have any doubts now that we will hit 300 and higher. We'll hit 300 and higher. And personally, I kind of low-key wanted to cut just because I know when there's a correction, it'll be even bigger, you know, being that there's a cut. But, you know, at the end of the day, you know, you still have investors who understand that, you know, we're not headed in the right place because we saw, if you saw the price of gold today, The price of gold today was up 1%. Shout out to Peter Schiff. If you listen to Peter Schiff's report, he just put it out. I didn't put it out. I know he's going to talk about how the fact that gold rose today very nicely, by the way, nearly 1% on gold, just over 0.6% on the ETF GLD, where it gives you that exposure to gold. But man, that's a beautiful looking chart here. That's just a beautiful looking chart on GLD. And again, if you're looking at it from the perspective that all the macro fundamentals are being broken right now, what we're seeing on the ground isn't what we're seeing on the stock market right now, then whether you buy it at 74 on the RSI or 78 on the RSI tomorrow, if it gets that high, then you understand that you'll still end up being profitable a week, 2 weeks, 3 weeks from now. Shout out to everybody in the chat room right now. Yeah, man, I'm spiffy right now. My bad for jumping straight into the monologue before we get into everybody's tickers. But yeah, man, I just wanted to look, look a little bit, better than a black shirt, because I usually wear a little Nike, I forgot what it's called, Nike sweat type shirt. But I just kind of want to look spiffy with it. That's all. I think I might end up actually doing it like this. All right. I'll change up the ties, change up the colors of the shirts and shit. But I think it's a good look. I used to rock it like this. I mean, shout out to the people who've been around long enough. I used to rock it like this. So I'll probably end up going back to that. What's going on, Life for Business, Quran Network, Eban R, Adrian T, Rafi Bulls, Poker Pro. What's going on? Yeah, we're gonna get to the banks. The banks needed the cut though. The banks needed the cut because you got to remember, guys. Shout out to Poker Pro for bringing up the banks. JP Morgan had came out back in February and they talked about how, in terms of corporate revenues for the third and fourth quarters of the year, the expectation is significantly lower than it was to the year prior, right? To third and fourth quarter of the year prior. So they needed that lower cost. They needed that rate cut. The banks needed that rate cut. Because it doesn't look very favorable for them for a situation where you have banks, private investors who are taking out higher cost money because they didn't get the cut. So higher cost money and then generating lower revenues. All right. It would have been cheaper for them if they got the cut. So even if the revenues were lower, they still could make the payment. Now you got a situation where somebody might not get paid in the next couple months. So that's basically what happened and why we saw Bank of America, I think JPM, I told you JPM was down, ticker Citigroup I saw as well. Even the locals, that's not it, STI, SunTrust, right? I saw, SunTrust, that one took slightly a dump there. So you got the mid-sized banks to the large-sized banks take a dump today, and that was very interesting. Yeah, Wells Fargo of the world. And again, if you don't want exposure to single stock risk, just go ahead and type in XLF. You can go ahead and buy the XLF. That's a really interesting one here to take advantage of exposure among many of those banks that we just looked up here today. All right. All right. Somebody saying they can't hear me. Felix, you and that Acer computer, man. Money Stay Woke, what's going on, bro? California, what's going on? Larry S. Anyone planning to invest in Slack? I need to learn a little bit more about the business. I understand they are one of the largest streamers available out there, but I need to learn a little bit more about the business. I do need to learn a little bit more about the business and about what's going on there. All right. Yes, sir, Andrew. Appreciate you joining me. I said no fundamental works. Yeah, all fundamentals are broken right now. All fundamentals are broken right now. But I'm sticking to the fact that those time-tested principles that were taught to traders like myself and to thousands, hundreds of thousands of other people will reign true once again after the next credit disaster. Ladies and gentlemen, we go through this it was every 5 to 10 years. Now we've gone beyond that. And this next credit disaster will be significantly greater than the one we just had in '09. And we'll be back again to who has value, where am I getting the most for my money, who's trading at the right PEs. We'll get there again. Right now, nobody cares because everybody's long, right? Everybody's long. Everybody's enjoying the ride. And, hey, this is what you're supposed to do in a bull market. Go enjoy it. Enjoy it. All right? Enjoy it. But I'll be the one ready to catch you on the way down. Yes, indeed. I have no idea where Bitcoin is. I have not looked at Bitcoin at all today. We'll take a look at that in just a bit. All right. Shout out to the people who checked out my little report that I put out there on Wayfair. Just a heads up on what's going on out there on Wayfair territory. I noticed now almost $22 million worth of Wayfair stock dumped by insiders over the last 60 days. They're continuing to sell. I believe there's more selling to come by those insiders. The CTO, the Chief Technology Officer, was hired by the company, had 350,000 shares. He's got less than 6,000 right now. So you got the Chief Tech Officer of an online retail company with basically no ownership and working for the company as this head of technology. So that tells you a lot right there. I put out the report. I wanted to be heads up first about it. I think like many stocks that I should have wrote reports on before, Foot Locker and many of those other ones that now are down, 30, 40, 50% from when I was talking about one example, Angie's List, damn near bankrupt right now, or headed to bankruptcy anyway. So Wayfair, I think, is going to be another one as well. All right, so look out for that report that we're going to see in August. I think that could be a huge miss on Wayfair. We'll see. All right. So let me go ahead and let's look at what you guys are looking at right now. Seeing some of the moves that you guys know I love. I love trading the shitty tickers because, again, if you got stocks that are failing in the easiest time to make money and to continue to run on significant losses. Again, we've got well over 100, I just stopped counting after a while, nearly 120 companies that are trading at negative book value, basically insolvent, right? That are trading at some, high prices right now. So when you're seeing stocks that are losing, you got to really go all in on that. So, Macy's is one I've talked about here a lot. Foot Locker, that's goodbye. That's headed down to bankruptcy as well. So there are a lot of easy plays that you guys can set some money aside. And I don't want to say easy because nothing in the market is easy, but high probability, that's the word for it. High probability plays to the downside, just because I'm short bias like that are companies that over the long run you're going to be able to make some money on. All right. Gold is saying those cuts are coming. I do believe, John, that will happen. I do believe the cuts will in fact happen. They just didn't get it this right now because, honestly, the data that was just recently released, was too strong. All right. It didn't make sense. It didn't make sense for the cut so soon, particularly after a month where the jobs number was just too good. They needed a bad number. I said that on like 2 shows ago. They needed a bad number. They didn't get a bad number, so there was no justification for the cut. We had been running on the expectation of the cut, so that's not a good thing. So the setup wasn't right. Let's look for a setup when we get a 5-10% drop from the peak, whether or not we pass our recent highs or hit it and come all the way down. That's when the cut drops. All right. Got in GME for A penny? Yeah, I mean, we've talked GameStop here. Again, there's a guy on YouTube here. He talks GameStop. Basically, he was a manager at GameStop for 11 years. His whole channel is just shitting on GameStop and the stock. I have no doubt this guy's probably all in on the short side of GameStop because every video he puts out is just shitting on GameStop. And he's got quite a number of views there. And, again, this has been a disastrous stock. And you said that you got in for a penny. I'm guessing you must have bought some kind of calls or something, right? I'm guessing. But anyway, again, that's going to be GMEQ very, very, very soon. So enjoy that. But a lot of other opportunities, but that's another one that's headed lower. But it reminds me very much of J.C. Penney. All right, very similar chart where you see that GME is going to be a very similar to J.C. Penney. It starts to slow down once you're in those low single digits, the 5, the 3, the 2, but it's going to keep going. So very much like J.C. Penney, where you'll see J.C. Penney, they'll go ahead and announce bankruptcy really soon, and those guys who think they're going to benefit here from an upside move will actually end up losing quite a bit of money. All right. Shorting when it crosses the 40, long when it crosses 60. Yeah, Bespoke, it's a really great video. Support me. Buy the book by John Hayden. You'll learn even a lot more. And it's a great way to basically figure out every stock. You can, after a while, you won't even have to draw the lines anymore. You'll just look at the RSI pattern and you'll see, and basically you can look at this chart and say, okay, this stock doesn't spend very much time above the 60 RSI, but it slaps that lower 30 band a lot. So this is definitely a bearish chart. All right. Let's keep it going. KERNW. I see, Felix, you're bringing that chart up a lot. Wasn't looking at the individual stocks today. Really was all about options, which is what I trade mostly now. There was another ML something play, MNT or something like I saw a lot of people talking about in the chat room. This particular play right here, I don't know anything about. Please educate us. KERNW. Don't know anything about it. Long ass ticker. All right, long ass ticker. Don't know anything about it though. MLNT. Yeah, there he goes. And a lot of people in the chat room are really excited about this. And yeah, it's got all the hallmarks of a possible 2-day run. I mean, the setup is really interesting where you had the guys, really buy into the lows, looking for a follow through on the next day. But the thing again is, when you're trading stocks like this, you got to be very careful that they can, make an offer and put a lot of paper out there, right? I mean, they're now trading at a very high price. You're at really big risk here for them to, try to raise some money on you. And next thing you know, this opens up 30-40% lower. 220% day. That's a big day for them. I think you have FDA announcement. So that's what's called, look, that causes these things to run. Did you actually get a runner? Let me see here. Oh, yeah. Nice chart. So opened up. Then sure enough, I no doubt believe there it is. The 25 moving average hugged it very nicely here on the 5-minute. Slapped it every time. And sure enough, again, standing on that 25 moving average and did it really, really well. Every single time, buying opportunity here and bouncing up to the higher price before breaking in and selling off there. But we'll see what happens tomorrow. I won't say it's a low float. I don't know where the float is right now, but you got to be careful with this because, this could very well squeeze some people here who think this is going to be a race to the bottom. But we'll see. Time will tell tomorrow. MLNT. All right. MLNT. Yeah, a lot of guys are still doing the low float thing, low float short thing. And look, if you can get shares to short, it's a great method, right? If you can get shares to short, it's a great method. But I just got tired of not being able to find shares to short. That gets old. That gets old real fast when you got a runner that's selling off and there's nothing out there for you to grab. Oh man, that gets old real fast. Let's talk about it. HUML, oil and gas. HUML, Humble Energy, OTC. Oh, okay, OTC stock. Add your OTC stock gas. Gathering bought up and pushed for a squeeze. 260. Oh, that's a tight float. No debt. All overhead contract workers. Potential buyout. CEO is 85 years old. You know, that kind of scary when I see a CEO that old. I mean, CEO 85 years old. But look, obviously, I'm sure he's got the paper in place for the right things in case a transition is necessary. But hey, we don't really care about that in the short term, right? I mean, obviously, this has been a huge move. What is that, a 400% winner? That's a 400% winner, ain't it? Let me go ahead and get this out. That's a 400% winner. Good Lord. I got to give it to you, brother. That's a 400% winner. Where's my radio? Let me see. Where's my radio? Because I got to get that. That deserves a round of applause and a monster kill to anybody who took advantage of that. That was a nice one. Let's do that one more time. Monster kill. Shout out to anybody who traded that, but I can almost assure you that was all promoters. That was all promoter, the one who won on that one. I can't tell you what the volume was. I see it wasn't that much. Obviously, it doesn't need that much because, again, that float is really, really tight at 285,000. So wouldn't even dare try to short something like that. But shout out to the guys over at Humble Energy. Don't know what's going on there. I'd have to look at the books to see how legit it is. But that valuation's got to be very interesting. And check what the revenues are. It'll tell you everything you need to know there. All right. John Hill, you bought some 65s expiring for 5 cents. Okay. GameStop. Okay. All right. That's what's up. Let's take a look. You actually did it on TLRY. All right. Nice breakout on the 25. Nice move there. Pharmaceutical stock. Nice day. 10% day today. All right, so this is very interesting. Let's see if it breaks above that 60 move, that 60 RSI. Again, that's been resistance, as you can see here, going back as far as January. We have a hard time staying above that. Again, most bearish stocks, that's the pattern. 60 RSI is a very tough level. We're headed right for it. Let's see if we break through. Obviously, if you break through that, sure, go for the ride and see what happens. This could be very much a turnaround situation, or it could just be a situation where, the sellers are out at least momentarily. What happens a lot when stocks sell off is you have some guys who are smart and they just walk out right away, and then you have some guys who sit and wait for a bounce to then sell their shares. So just because the selling has subsided momentarily, I have no doubt you had some guys who were holding from 48 and hoping and dreaming that we get back to 48 for them to go and sell their shares. So this is really interesting there. That's a nice day, though. Big, solid, confident candlestick in TLRY. Hope that continues for you. Yeah. What was the news there? I don't see any justification for the news. So let us know in the chat room if you can. All right. Let's keep it going. Altria, okay. Yeah, not the prettiest chart in the world. My man still looking very, very bearish here, looking to make some new lows. All right, trying to find some support here. Maybe it doubles up and, we head back higher. But, that's definitely not the day you wanted to see on a company, on a day really where it was set up for you to go green, right? You really had a day that was set up for you to go green. I know they're facing some lawsuits in regards to some of the e-cigarettes. You have some states that are really going after these e-cigarette companies. So really interesting to see what the future looks like for Altria. And speaking of lawsuits, don't buy the mainstream media hype and what's going on here on Boeing, by the way. Boeing has gone all out along with CNBC and many of these other, media outlets like MarketWatch and others, Benzinga as well, saying, oh, well, hey, look, this 787 MAX, hey, here's a new order from, I think, some company out in China or Korea. Just did what they call an MOU, or a memorandum of understanding. So basically a fake-ass agreement to buy some planes that's not really set in stone. So I don't believe that they're off the hook just yet. They've got some huge lawsuits from some of these families, particularly in the Kenya situation, that they're going to have to figure out and solve. And also, I think the American consumer is probably the most intelligent consumer in the world. And these are people who, hey, will look at what kind of plane they're going to be taking before they buy a ticket. And if it's that 787 MAX 8, they're not going to fly that plane. So again, that's down the road, but I'm just not buying that the turnaround is now for Boeing. We'll see in due time, but again, today's price action just tells you that a lot of people aren't buying it just yet. They're not buying it just yet. All right. Do you think the banks are going to go lower after today? I can't predict the future, but I would be selling the banks still today. I'd be selling the banks still, particularly going into earnings, because I don't see a cut next month either. So we're going into the next earnings, or third round, or Q3 rather, in August. I think it's going to look really ugly, and I think you'd hate to be in bank stocks long going into August. So I would definitely be looking at some recent highs on some of those banks and taking advantage of possibly even selling some calls or buying some puts with quite a bit of time on them. And by all means, if you're going to go with that, if you're afraid of volatility, then go with the ETF. But if you want exposure to bold moves to the downside, then I would definitely go out and find, weak players within the space, right? So whether it be, Wells Fargo, or you go into a mid-major like an STI or BBT, right? BB&T, you could somebody like this, right? So I would look for a lower tier, financial institution. I wouldn't necessarily jump on a JP Morgan or anything like that just yet, just because those banks can, and the market understands those banks can absorb those kind of shocks a lot better than your mid-cap size banks. Interesting ticker there on U.S. Steel. There was a lot of promise. I remember here on the show, there was a lot of promise coming into 2018 and 27. Really, it goes back to 2017 about the Trump administration and what it meant to U.S. Steel. But again, when you've got the tariffs, when you've got a slowdown on international growth, right, and then you've got China continuing to undercut U.S. Steel in the global market as well. U.S. Steel and domestically, we saw the recent PMI report, right, that showed that for the most part, manufacturing is down in the United States. So who do we sell the steel to? The market is very smart, and sure enough, they're not holding the stock at all. And we could very well see U.S. Steel back at some 2016 levels, if you remember, going into the Trump administration, right? I remember just like yesterday after he got elected, you can see the moves in the market. It was just incredible rise in U.S. Steel because we expected huge spending in infrastructure. We expected huge cuts that would make business for them easier or more productive, more profitable, but it just never developed and never materialized. And unfortunately, what a great short for anybody who had caught that, who had been watching that. But U.S. Steel here just headed for the low, coming out of that low RSI bounce here. We talk about that a lot, those sub 20 RSI bounces. Interesting low here because you had that higher low on that. I wouldn't count that in as any kind of trend in any other direction. As you can see here, you had a huge rejection of that day to day. So I believe we're at 58R in the RSI. It probably smacks it and comes right back down. All right. Probably smacks it and comes right back down. Let's take a look at it. ZM. This is an interesting one. ZM is another unicorn stock. Another unicorn stock had a really great IPO. This is a stock that, boy, opened up, right? It's just over 60, now at $102 a share. Really frustrating because these are kind of plays that, when these IPOs open up, they don't have options, right? It's just pure stock. And unless you've got quite a bit of money sitting around, really doesn't make sense for you to go after $10 or $20 on just a couple hundred that you could possibly afford, depending on, of course, the price of the stock. But ZM's been a nice move right here. ZM has been a nice move right here, like that beautiful gap up. I don't know what happened to cause the gap up. You're going to have to look into the news on that. But, again, this is another company that we just got done talking about, right? Doesn't generate profit. This is the new economy, right? Where we got companies that can just run on losses and losses and losses because credit is just so easy to get. And again, I'm telling you right now, when the credit market's tight and these companies can't get cash, it's going to be slaughter on the street. I mean, you're going to have people who are going to be jumping off bridges. People are going to be blowing their heads out in their office. We saw that back in 2000. We saw a little bit of that in 2009. We're going to see a lot of that. We're going to see a lot of that in our lifetimes. Most of you guys listening to me, you're under the age of 50. You're going to see it in your lifetime. You're going to have guys who are going to kill themselves, when this falls apart. Zoom Media Video Communications is the ticker. Again, I know it's a software company. Don't know too much about their products per se, but I know they're just not profitable. All right. Let's go. BX. Blackstone Group. Huge financial organization. This is an interesting stock, the Blackstone Group. I read an article today where they have gone out and from a Singapore company. What's going on, Bats? From a single Cali Rod. What's up, man? They went out and bought $15 billion worth of warehouses. They went out and bought $15 billion worth of warehouses. And because they understand that the future is e-commerce, and many of these e-commerce outlets are really focused on what's called last mile to delivery. And last mile to delivery is really where a bulk of their shipping cost comes from. It's that last mile from the warehouse to the customer's home. And what you're seeing is that these companies that want into this space are buying very large warehouse space in large metropolitan areas. That's going to alleviate that last mile cost burden. That's why if you saw recently, you may have seen ads for Amazon where they were offering their workers $10,000 to start their own delivery business. Have you guys seen those ads recently? So people who work at Amazon on the factory floor, if you want to move to delivery, Amazon would give you $10,000, which is bullshit because that company, that's another company, by the way, that's, runs into huge losses. But again, they could offer a lot more than that. That can't even get you a decent minivan today with low mileage. But I digress. They go out and get yourself a van. You'll make those last mile deliveries to their customers. So that's a big thing going for BlackRock right now, Blackstone Group. So look into that, do a little bit more research, and a very interesting article is out there today on Blackstone Group. All right. You said I sound like Peter Schiff, the Dr. Doom. No, I'm just being realistic. I'm just being very realistic about where we're going. Australia came out today, and they're already saying that their pensioners are already taxing their retirement system. All right. So look, it's already going to start, and but it's going to be the biggest blessing. It's going to be the biggest blessing to us all. Let me see here. You're going to be able to get some great, great companies for literally pennies on the dollar. You know? So it's going to be a very, very big blessing to you. You know, there's going to be a lot of people that unfortunately are going to like it. There are going to be a lot of people who are going to lose a lot of money because their money isn't built on, you know, real value, but superficial value based on leverage, right? Based on leverage, because many of these, particularly pension funds, when they go to the market, they invest in highly leveraged products because they need to make a substantial return on their money in order to satisfy the requirements of their pensioners, right? Their pensioners are taking money, so these funds have to generate high returns. And when that system fails, the whole thing falls apart. The whole thing falls apart. All right? So we are going to get to a time, again, in our lifetime, where there are going to be more people who are going to be taking money out of these pension plans and also of Social Security and many other, retirement funds and accounts than are actually putting into the system. All right. Let me show you here. I want to just show you. This came out today. Somebody talked about this UUU. This is a horrible stock. I've had guys bring this stock up a couple times here, and it's always been just a shitty play. It hasn't done anything. But I don't know why guys keep bringing this ticker up. It's not going to do anything. But here's the article that came out earlier. Wave of retiring baby boomers to test Australian pension plan. So their baby boomers are already getting there. And, look, it's going to be ugly, guys. It's going to be ugly. It'll start all over the world. But that's why many of these countries like Australia, like Europe, instead of being honest to their people about the fact that they're bringing in all these immigrants from the Middle East and from Africa and all that to help solidify their unfunded pensions, they're saying, oh, well, they're just coming across the border. We don't know what to do. We can't stop them. We're being overran. No, you're allowing them to come into the country because or you have the expectation that these people will, figure their way out into the economy in their own way, create businesses, start jobs, and hopefully be that generation that fills the gap. But again, many of these countries in Europe aren't being honest to their people, so they say, hey, we're just being overrun. And that's not the case at all. It's all about the money. It's all about the money. All right? Let's keep it going. Somebody bringing up AT&T. AT&T, yeah, this is for as big as this company used to be, obviously it was broken up, but as big as this company is in terms of sitting on billions of dollars in cash, I didn't realize how far behind they were to Verizon in terms of the race for 5G. I mean, they've gone out of their way to create a fake 5G called 5G Evolution, which basically isn't 5G at all. It's just basically a made-up term. Yeah, AT&T has just really been a loser over the last year and a half. In fact, I mean, if you're looking at this, I mean, if you're a pensioner or you're somebody who's thinking that this was one of those classic companies, sure, I mean, enjoy the dividends, which is probably what you enjoy out of it most, because you're definitely not getting any capital appreciation when you look at AT&T. Kelly Rive said you got wrecked today. Shorty the Spy on the breakdown at 2. Okay. Yeah, there was an initial breakdown, but again, when the minutes came out and they realized how the governors talked so dovingly about, hey, we're not cutting today, but we want to let you know that if things turn around, we will cut. That turned things around very quickly. INO. This is a really interesting company, this INO, which is basically like the Chinese Tesla. And it's so interesting because the CEO of this company has talked about very similar to the way Elon Musk has talked about here in the States. That's how he's talked about in Asia. There was an article on him as well. He said that they're going to be able to get to profitability before Tesla. These companies are on two different levels. Tesla is far larger than NIO. from what I've read, the products aren't even on the same levels as well either. Obviously, I've never driven a Tesla. I've never driven any of these INO products either. So, go figure who to trust. But I know I see quite a bit of Teslas on the road. I've been inside of a Tesla, and build quality is excellent. But again, just pure, balance sheet to balance sheet. It's just on a whole different level compared to INO. All right, but again, both money-losing corporations. Enjoying a nice bounce here on INO right now, but again, $2 stock. I don't know. I don't know where this could go. It's been a very, very, very ugly year for them so far. Oh, so it's 4Us. All right, so OTC. It's still OTC, right? Oh, no, okay, NASDAQ. All right, New York Stock Exchange, okay. Energy Fuels Incorporated, uranium play. All right, so real sketchy. What's been going on here? Uranium. What are the other uses for uranium besides military usage? All right, besides the big bombs, man. I know there's got to be some other use for them in the economy, right? Any kind of there's a chemical similar 92 periodic table. Okay, highly radioactive. Is it energy? Okay, so it is used for how uranium. Okay, so uranium is used in nuclear fuel. Okay. All right. So yeah. All right. So now that I'm reading this is bringing memories. Okay, because I remember reading articles about North Korea and their unspent uranium and all of that stuff. Okay, nuclear energy. I got you. All right. Understand. All right, so for such a dangerous product, they have quite a small market cap here, $300 million. So only 105 employees. Again, take TradingView with a grain of salt, but this is a relatively small company. This is a very relatively small company. So, when that kind of explains why we're seeing a chart here that, for the business that they're in, it just seems it doesn't fit. So I would, if I were you, read the financials to really see what their exposure is to this, to this sector, because we got some companies that can end up on the New York Stock Exchange that are all about, this is what we want to do, but this isn't exactly what we do right now. All right, that's not exactly what we do right now. I can't remember the ticker. I know some of you guys will, but there was a company that was trading. What was the name of it again, guys? That had a contract with the nation of Japan, and they put these buoys out in the ocean. And what those things did was that they'll catch the water waves, and then with the waves they would transmit energy back to Japan, and it'd be using. You guys remember the ticker? I can't remember the ticker. There was another company as well. And again, this was a couple of years. This was 2016, 2015-ish, when renewable energy was really, really hot. There was another company that had this, we want to build these massive cloud producing factories that produce clouds to make rain, and it'll get water. It's just a whole bunch of BS. Y'all know what I'm talking about. But that company was out there. Oh, yeah, OPT. There we go. OPPT. Are they still out there? Yeah, it was something like that. OPTT. Yeah, there we go. Ocean Power Technologies. Oh, woo, boy. Yeah, I don't know what's happened to them. I gosh, I gotta give that a. Yeah, that's horrible. That's pretty horrible. In fact, I need to download some fart sounds because I want to make some fart sounds when we pull up charts like this. For right now, I'll do the R. Kelly. I believe I can. It's a damn shame, man. It's a damn shame. Because the technology sounds right. The technology sounds very interesting. But, man, you know what? Kudos to the guys who got in here on some shorts, man. Obviously, I mean, you've been, goddamn, this one would have fucked the shit out of you, though. But obviously, in between times, there were some great opportunities here to get, and I think they probably did have some options at one point. But interesting tickers. All right. So what else you guys are looking at? We brought up NVIDIA a couple days ago. Had a really nice day yesterday. I thought that was going to be the continuation of something, and today just couldn't really get off the ground, man. This is just a stock that's been, really suffering over the last several weeks here back in May. The May sell in May go away was so true for NVIDIA. And, I was looking forward to possibly this being a nice bounce, particularly if we got the cut today. That would have been nice. We had the Trump tweet yesterday. And look, that Trump tweet was really good. It helped, NVIDIA helped a lot of companies that have that China exposure, not so much Walmart, but one of the companies that I saw that helped real nice yesterday. There were a few companies that did really good yesterday on that China tweet by Trump. But, I'm like many people. I don't believe we're any closer to a deal when it comes to China than we were 6 months ago. That China BS worked, for a long time. I mean, I'm even in hindsight looking back, like, I don't know how we were able to be fooled by, the China deal is coming together. The China deal is coming together. They're coming to see us. We're making progress. I mean, it's just, I know our grandkids are just going to look at us and just like, how stupid were these people? Like, how dumb were these people? And I know they're going to look back and see that. I know they're going to look back and say how dumb we were. But regardless, we'll continue to keep it going here. But NVIDIA, a bit upset today because today was a day to run. And NVIDIA was unfortunately absent in that discussion today. Not much of a gain, not much of a sell. So we'll be figuring out what happens tomorrow on NVIDIA. All right. Yes, indeed. Y'all press like on this video right now. Shout out to the people who are in the chat room. Let's keep it going. GLD. Yeah, I'm a big fan of GLD right now, man. I'm a big fan of GLD. If I had more money, I'd definitely be selling some puts on GLD for a year, as far out as I could, because I honestly do think this is going to be a much, much higher product. Shout out to guys like, somebody brought up Peter Schiff earlier, because, look, he got you in at the low. I mean, I remember Peter Schiff starting to make videos regularly, 2017, 2018. So he got you at some of these lows, and, many people have enjoyed it. And we slapped that 1393 today. And I've talked about that as being that multi-year breakout level. Let's spread the chart out a little bit. So we slapped it today. And, going back to 2013, right? So we're going back now to break out of a 2013 level. We slapped it today. And we're above the 60 RSI for the first time in gold since 2012, right? Yep, October 1st, 2012. So this is a huge, you probably can't see it because I think my head's blocking it there, but since 2012, for the first time, we're at this RSI level here on the monthly chart anyway. So that's a very, very, very strong sign that even on this large time frame, right, which requires, every trade is literally billions of trades in every candlestick, the move is confirmed. It's confirmed in the chart. It's showing that, you do have investors moving to this commodity for safety. They're clearly saying that something is wrong, whether they don't appreciate the value of the dollar or they don't believe that their at-home currency is going to be able to survive the next couple of years, but they're looking to hedge whatever they think is going to happen by moving into this commodity that has been trusted since the basically beginning of modern society as a purveyor of wealth, basically. All right. Yes. Gold looking really nice. Looking really nice. Yeah. If you can buy some, get some GLD. There are cheaper ways to get it. There's some other ETFs that give you even much, smaller exposure, where there'd be some, JDX, which is on the minor side. You got to be careful with this because I know there's also a junior minor side, which I think is JDXJ or something like that. GD or GDXJ or something like that, right? Yeah. Probably stay away from the junior ones. Although, I mean, if you're going to go with a junior minor, just go out and get the ticker itself, because that way you'll get that boom explosive move. Whereas, you go with something like this, you're not really getting the big boom. So just go out and find those small cap gold miners with real, actual real, assets in the space, and benefit from, that price increase in the commodity. Oh yeah, JNUG is another way to play it. JNUG is another way to play it too. That's relatively inexpensive. There's options available for it as well, and it gives you that 3x leverage. Yeah, gives you that 3x leverage. Got to know what you're doing here on these plays. Let me get back to these daily charts here. But you got to know what you're doing on JNUG. I've traded this in the past, and it's been a very, very nice chart when things are going in the right direction, but it can turn against you very, very quickly if you don't. KG, I'm twice a week, bro. Twice a week, Sundays and Wednesdays right now. All right. Yes, indeed. You can always find me on the blackboxstocks.us chat room. That's where I'm at every day. And I want to put out that Black Box Stocks video, but man, they're like, "Oh, Sal, can you please wait on it right now?" Because they're doing a little training where they're showing you how to use it the right way. You know what I mean? They're doing a little trainings during the day for the people taking care of the taking advantage of the trial. Every morning they're doing the trainings to teach you how to use, this is how you do the stocks, this is how you do the options, this is how you use the filter. So they're doing it the right way. Where my way is I'm going straight to the action alerts and showing you how to make sure you can benefit from every single alert. You will catch every alert that hits triple digits with the way I will show you how to do this. And it's going to come out tomorrow, which is the second to last day for those of you guys who are doing the trial right now. All right. Just follow me on Instagram at GotPennyStocks. I put out a lot of info on Instagram now. GotPennyStocks. My Twitter as well, GotPennyStocks. But those are the best places to find me outside of YouTube, because I can post regularly very quickly there. All right. SEC Trader said 100% your video would be better. Yeah, I mean, a lot of people don't really teach people like me. I can get better at my teaching too, because some people say I'm too I skip stuff, but I don't like, because most of the stuff I skip is bullshit though, because people don't really like. Most people just like straight to the beef kind of thing, and they're like, I think I want a more wholesome view of the market. I'm like, fuck you, lady. That's some lady who wanted me to teach her how to trade stocks. Let me see here. But all right, so somebody was calling me. My bad, lady. So DXCM, let's take a look at. Let's see what I look at. DXCM, Dexcom Holdings. Dexcom Holdings. Oh, wow. Okay. I have no idea what this company is. $153 stock. $13 billion market cap. Unprofitable. Yeah, I'm going to have to learn a little bit more about this. Let me see here. You know, the best place I like to go for my financials is marketbeat.com. Marketbeat.com. And by the way, those of you guys looking for a new broker, hit my link up, myfreebroker.com, myfreebroker.com. Trade for free. Stocks, ETFs, options, free streaming quotes, free live quotes. myfreebroker.com. Use my link and you'll get instantaneous account approval. myfreebroker.com. If you already been using Robinhood, well, I'm telling you right now, they're better because they have telephone support. So if shit goes wrong, you can actually give them a call and solve it over the phone. You got an issue with the trade, call their trade desk. They'll go over the trade with you. Won't tell you to do it, but we're more than happy to, tell you their thoughts on the trade. DXCM. All right, so book value of just $7. Book value of $7 a share. Company lost $127 million in 2018. Market cap $14 billion. Look at that PE ratio, 512. All right, that's if obviously it's a negative. It's you won't see it now, but that's if the PE, that's where it would be at. Company has missed. They missed on Q1, missed on Q2. Brief moment here. Let me just take a quick look at the financials real quick. I know most of you guys don't even care about that shit. I just want to take because this is a very interesting chart. I mean, this stock has got a tech chart, but I'm saying this is a health services company. Okay, operating income is down well over 400% from 2017. Research and development, so they're spending a lot more this year, almost 200% more this year. Research and development. Gross profit is up slightly. Okay. Cost is increasing, all right. Okay. They ain't paying shit in taxes. You'll find these companies that are like making billions of dollars and paying like no tax. Because you'll see on the income statement, income tax, and sometimes it'll be a big fat zero. Or say 100, 200. These companies are not paying any taxes on their money. It's crazy. But anyway, looks, by the look at it, it's just your traditional company that, unfortunately, for me, this looks like a case where you have a company that does have a path to profitability. That's the new way to say it now. Path to profitability for these companies that run huge losses, that people continue to give, these huge ratings. And let me see what a recent price target. 66 125. Okay, we're way above 125. Raymond James with the 150 price target. Morgan Stanley 160 back in February. All right, so so I mean, this is really interesting. So I mean, it's got some issues up here. It's got some issues. I think at those levels you have some people who are questioning the valuation, and you look at the chart and say, hey, this is clearly an opportunity for a put. I think it's a clear opportunity for a spread. Buying an opportunity for you to go both ways. Going both ways. But on the put, be a little liberal with it and give yourself a little bit of time because, the 140 puts are going to be pretty high there. But why not a 130? Put yourself something out of the money that if it is, in fact, going to get ahead that way, you're going to make quite a bit of money on the way down. All right? Absolutely. Hey, and that's 9 p.m., bro. 9 p.m. Sunday, 9 p.m. Wednesday. 9 p.m. Sunday, 9 p.m. Wednesday. All right? Actually, make that 9:30 because I'll be showing up a little late. So 9:30. 9:30. Make it 9:30. Make it 9:30. What's the link to Trader? Yeah, traderslibrary.com. www.traderslibrary, thetraderslibrary.com. www.thetraderslibrary.com. That's my library. Basically, again, it's just out of print ebooks on finance. Most of them that aren't available in print any longer, so they can't sue my ass for it. So just stuff that people don't want to go out into the website or go out into the internet world and download. You can download a virus and stuff. I sell it for basically dirt cheap for you to get yourself a copy of the book. Some of them are books that you can't even find anywhere else. Yes, sir. All right. I appreciate you, Londell Carter. Yeah, KG, you can't call in. You can't call in. All right. Just all we ask is that people be, concrete with the info. That's all. You got to give information people can actually use. What's going on, Lania? I see you looking at your ticker, AMD. Yeah, we talked AMD a couple shows ago. I like what they're doing. I like what they're doing here. This is a ticker that, has split a couple times. I'd always wondered why, they couldn't trade at the same valuations with NVIDIA, being that they have, I wouldn't say similar market caps, but huge market caps. AMD, a $32 billion company, but the stock has split several times in the past. So this stock, yes, trades at AMD at the $30 level. Still looking really good, man. Still looking really good. The trend is your friend, and sure enough, it's holding very, very well. We do have to break above the 60. It's got to stay above there, right? It's got to stay above there here because that RSI is looking a bit lazy. It's looking a bit lazy here. But a starter position is kind of a bit dangerous here. I'd be a little bit patient, but as of right now, still continues to look healthy. But I'd be cautious. If you're going to start, I'd start a small position here on AMD because it's looking a bit tired. Looking a bit tired, and that's not the prettiest candlestick you want to see on a weekly chart. All right, I got that. That's the weekly chart. It's not the prettiest. And again, if we go to the daily, as you can see, the rejection of that higher 30s level. So not the prettiest candlestick. I'd want to see what happens here. Maybe a few days more of some, that a floor has been built up, or if it decides to continue to sell off, find some support here, the 26 level. But again, a rejection of that higher RSI level is always a concern for me. So we'll see what happens here, AMD. All right. Yeah, I always want to trade cautiously, man. Always want to trade cautiously because the goal is to be here for a long time. We've already been here long enough to see so many people come and go. Because you got a lot of people who think they're going to get rich a month from now, 2 months from now. They forget that this is very much a marathon. I want to be doing this when I'm gray and wrinkled and pulling off trades that has 30 or 40% of my account in them. That's a quick way of finding my ass back into a 9-to-5. And I ain't doing that shit no more. What else you guys got for me? What else you guys got for me? All right. Let's take a look here. Yeah, I did look. Oh, no, I don't think I looked at Kern. I didn't look at Kern. God damn. Shit. What was this? When was this? Oh, wow. I'll give it to you, man. I'll give it to you. What's going on, Moyo Sauce? I'll give it to you, man. I don't know what that was about. I didn't see any alerts for it. Again, I know I wasn't paying attention to stocks at all, but Financials Holding Company, how marijuana software company became first of kind. Okay, so was this is the IPO? NASDAQ debut. Okay, that's what's up. what was the 10-minute like here? Oh wow, it's beautiful. Look at that. All right, so you had a nice morning, and all of a sudden looks like somebody sent out a tweet or something, and it just took off. Why did it take off? You gotta have to find out what happened here, because somebody sent out some information, because you can literally see the volume was and then somebody out of sending the email or something, and people went crazy. Okay, Kern W is the warrant for Kern. Okay. All right. Somebody sent out some information that got people running in there. Very small company, $81 million company. That's very, very, very small. And again, that's $81 million at its current price. So you were talking about, it opened up at about 18, 19. What did it open up at actually? 20. It actually opened up at 20 exactly. And so we're talking about that $40 million company. It literally doubled. Yeah, it doubled its market cap in one day. So we'll see what actually, it's not setting up to be a very nice day tomorrow. But yeah, look, I've been wrong before. I mean, I think that's the highest RSI I've seen this year, 99 on the daily. I think that's the highest RSI I've seen this year. Last year, I do remember pulling up a couple 102, 103 RSIs, but that's the highest so far this year. 99 RSI. That probably right there is the easiest short you will probably ever get. But again, you probably don't have anything because all the institutions have already grabbed it. All the institutions have probably already grabbed them for the most part. 99 RSI, yeah, that thing has very little, maybe 51, 52 out of it, but at that point, it's mathematically almost impossible to continue to go higher. It should have hit 80 after hours. Let me see here. Good Lord. Yeah, am I seeing that right? 67 after hours? Oh shit. So yeah, we might see that we might see a 105, 106 RSI open. Oh man. Oh man. Oh, that's gonna be ugly though. But it's gonna be ugly though. I mean, you know what's gonna happen when it opens up. I mean, it's just gonna be very much like a Beyond Meat that I'm still kicking my ass for, because a very similar setup where you had the day before closed. You had a high open in the morning yesterday on Beyond Meat, and I saw I think the puts go up as high as 180. I think the highest is 180. Dude, I saw this 180 put. My hand was on the trigger, and I didn't fucking pull it, man. I didn't pull it, and I don't know. I just chickened out, man. I just chickened out. I knew and this is how probably that stock we just pulled up is going to look like. I saw the open. On Black Box, we had the open, right? It had the alert, high open interest alert, and all that, bro. All that. And it just, next thing you know, when those opportunities close like this, it's just closed, bro. Because, you had an opportunity to get a 180 put while the stock is at 200, and then watching it lose nearly $40 worth of value in the course of 2.5, 3 hours. That's a shitload of money. That's a shitload of money. That's a shitload of money. Mm-hmm. Yeah, it's not going to be a pretty open. It's not going to be a very pretty open for them. It's not going to be pretty open for them. It's not going to be a pretty open for them at all. Yes, indeed. All right. Any other tickers you guys interested in? All quiet as hell today, man. Let me see here. There's some other ones that I know I had been looking at earlier today. One was Goldman Sachs. This was really interesting because this was one of the few that was actually up. Actually, I think it was actually the only large cap financial institution that was up. And I know, look, Goldman Sachs is the devil incarnate bank. I mean, this is really Satan's bank, if you know anything about Goldman Sachs. But yeah, it's so interesting to see that they were actually up, and they've been in that channel. And I've been watching the stock for very much because I'm certain that if it either can't break above or below, this thing is coming down like a rock. But I've been watching Goldman Sachs, and it's fighting to hold that channel like its life depends on it here in 2019. So we'll see if they needed that cut. Obviously, just like any other bank, they need that cut to kind of break out of there because they haven't been able to get back to those 2018 highs. And this is a company, again, that's got a lot of exposure to tech, and they're really being hard on Goldman Sachs in 2019. So there's a lot of money to be made on the downside of GS if someone catches it right. The stock got to as low as 151. It's $44, $45 higher than where it was just back in December. So we'll see what the street continues to see. Yeah, oil is down. Somebody bring up USO. Oil is down. But the last 2 days, it has been up. There it goes. In fact, instead of looking at USO, let's just go ahead and straight look at, U.S. oil, which is basically crude. This is the pure play right here, the commodity. So this is USO. This is a live chart right now of oil. Look, we went and bombed those 2 cruisers, and sure enough, I know we bombed it just because nobody got hurt. So obviously somebody got the intel. Everybody was, hey, is there everybody off the ship? Okay, all right. So we go ahead and launch that bomb. Sure enough, oil rose 3 days ago on the news, and it's been up ever since. Actually, that was 4 days ago, so now down slightly the next day, and then so far 3 days in a row of gains since the bombing. So look, these people will do anything to get this commodity off the ground, but at the end of the day, the price of oil is a reflection of the demand for the commodity in the country and in the world, all right? In the country and in the world. And it's clear that oil demand is just down. And that's because manufacturing is down, global productivity is down, and it just hasn't been reflected yet on our exchanges. But yeah, that's basically where we are. Oh, what's going on, David Lincoln? How are you? Yeah, I just pulled up BYND. Just pulled up BYND, and look, this is another one that again, traders really love this stock. Traders really love this stock. You got to be really, really patient with Beyond Meat. We've seen this before. The problem is that the volatility, IV, is so high on this play right now. It's caused the options that even are far out of the money and have 6, 7, 8 months, a year, 2 years on them to just have insane cost, right? So really the only way to really make money is when you're taking a cheap one and selling it over. So basically doing a spread on those. That's basically the only way to kind of make some money here, to be able to set some monies on the long side of the trade. All right. So selling a call option for like 2021 at the 160 level. I think selling a call option on Beyond Meat at 160 for 2021, I think that's a hella smart idea. Now, the problem is that nobody here wants to be that patient, and nobody wants to have that kind of money parked for that long. Although that's going to be the smartest fuck trade 2 years from now when we see Beyond Meat trading significantly below where it is right now, as the space becomes more attractive to larger players as the market develops, right, and it matures. That's what happens, is that larger players enter the arena and they provide their resources to further lower the cost of doing business within that sector, right, which is that vegan meat area. And they end up, decreasing margins in that area because it becomes cheaper, to sell that good. So in the end, that's the smart way to buy it. Right now, everybody is excited. But in the book Securities Analysis, Benjamin Graham, he mentions that the market has the ability, what's the exact saying, to be something more than you have the ability to be solvent. I forgot what the exact word of the phrase is. I want to get it right here. There's Benjamin Graham's. This is misquotes. Oh, okay. Actually, it's by John Maynard Keynes. John Maynard Keynes, who is a very popular economist. The market can remain irrational longer than you can remain solvent. That's the saying. That's the saying. The market can remain irrational, and that applies to individual issues. All right, that applies to individual issues. And that's very, very, very true. We've seen a lot of stocks. Stay high for longer than we would have loved it to. Absolutely. So you like the idea of selling the 160 call? Yeah, I mean, absolutely. I like that idea too. I mean, as long as it's got time on it, man. Because if you remember, for example, like Tesla, the what we found out about Tesla, in December or March, we knew back in May. It wasn't anything new. It wasn't like, we didn't know that the company was burning through cash. We didn't know that the company wasn't meeting the Model 3 orders and they weren't going to hit that 5,000 car limit. We knew all of that, but look how long it took for the market to say, okay, all right, every ER report, this guy's got excuse after excuse after excuse, and it finally gave way. But it was a long time till it got there. Obviously, there was some tops and lows, tops and lows, and tops and lows, and you got traders who caught those every single time, right? But at the same time, if you were just someone who was looking for the breakdown, right, just looking for the responsible breakdown, you didn't get it for months. And this could very well be what we see in Beyond Meat, where we just see a stock that continues to hold those highs. By the way, Beyond Meat, if I'm correct, hasn't had an ER yet. I don't think they've had an ER. If they had one recently, right? And it actually was pretty. They haven't had their second one yet, I think is what I want to say. Beyond. Yeah, they had one on June 7th. Yeah, sorry about that. They had one on June. They just had one, but they hadn't had. And that one doesn't even really count because that one was one that everybody already knew going into the IPO. So kind of knew what, and that one actually didn't even justify. Let me see here. And of course, all these these websites all want you to sign up for that. I ain't signing up for none of y'all shit, man. I'm not signing up for no premium this or premium. All that data that you can get for free on NASDAQ.com, they want you to sign up for the premium. I mean, they just really think people are just lazy. I don't got time to dig all that up right now, but yeah, they came out with that number on June 7th. That wasn't even really that good. Brief moment here. Let me just pull. Was that the? Gosh, why? All these financial sites just give you a lot of the bull. Just go straight to the details. I don't want to read. Nothing you guys got to say about it. Just let's go straight to the details. And you're trying to click. Beyond Meat earnings. Brief moment, you guys. I'm just trying to get to somebody that's just statistical data, company outlook. Oh God, shit is so irritating. All right, let's see Business Insider. Come on, you guys usually. All right, there we go. So yeah, Business Insider. Finally, thank you. Somebody just get straight to the point. Just show me the numbers. I don't care what you think about it. Earnings per share. Yeah, it was a loss. Yeah, the company reported a loss for the quarter of 14 cents per share. Now it was a slight beat because it was expected to be a 15 cents per share loss. Revenue for the quarter was $40 million. This is a company that has a $40 billion valuation, generating $40 million in a quarter. Can you believe that shit? But anyway, that $40 million was a 100% increase from same time prior year. So full year outlook is revenues are expected to exceed $210 million. So that still puts a massive overvaluation on Beyond Meat. Let's go back to their chart. Puts a massive market cap on their thing. And look, I people say, "Oh, Sal, you're just so you just want everything to go to hell. You just want everything to go down. You're so pessimistic." I just want the truth. That's all. I just want the truth. I just want people to buy stocks that are actually going to generate real shareholder value. I want to invest in stocks that can afford to pay a good dividend, can afford to really accomplish the things that they say they're going to be able to accomplish, and not by taking leveraged debt. I don't understand what's wrong with that. I don't understand what's wrong with wanting to buy a company like that. That's why Warren Buffett has made billions of dollars. A lot of people think he made billions of dollars through his insurance company. He made billions of dollars through the insurance company, but initially he made his millions selling put options on insurance companies. Why? Because he understood that they're cash flow rich. They are responsible because they have to be responsible because of the nature of the business. So it made sense. Until today, it still makes sense to sell put options on insurance companies, although it's a lot more expensive now than it was in his time. But I just don't see what's the problem with just wanting some of these companies to be legit. I just want to be legit. That's all. To be legit. Somebody say buy some Mickey D's, chill and smoke weed for a few years, you'll be okay. Well, Mickey D's is now going off the deep end too. Again, McDonald's used to be a company that you saw was very financially responsible, but now they're trading at PE ratios that are quite high. For a company that, by the way, I just showed you in my last show, has been missing earnings reports. They missed two in a row. And still going up. So something ain't going there either. Something's not going right there either. Right? Somebody said David, you said there's a 6-month lockout period on a lot of shares, but over time, more shares will become available. Yeah. And look, there's going to be a lot of people like, what's his name? Chamillionaire. Those guys who might remember Chamillionaire. He got some money in Lyft. He got some money in the Lyft deal, and supposedly he's in that too, that Beyond Meat too. So he's all up in that these kind of plays. I think there's another rapper as well who's in that Beyond Meat too. Somebody here may know. Can't remember his name right now. But you got a few interesting names that are stuck inside this Beyond Meat. Speaking of Lyft, what happened to Lyft today? Okay, down 1%. And again, these are, Lyft and Uber. Those, again, two companies that the market is being very, very generous with, pricing in future earnings capabilities. All right. Just completely ignoring the fact that, these companies are still giving away rides free of charge. Do you think it's running because it's hard to borrow? No, I think it's running because our generation loves the idea of being, hip to things, and being hip to, meatless food that is quote unquote healthy and good for you and quote unquote nutritious. Again, I haven't read any data on that. Is hip to people, and people who have mommy and daddy's money and think it's cool are going to go buy it, and are going to buy a lot of it because they think they can get rich off of it. And you got a lot of brokers and stuff who sell this to old people as, hey, this is the future of American food. This is going to be able to meet the demands of the 7 billion plus people across the world, because our industrial farm system can't be replicated over the world because of the damage that it could do to the world as we know it. So why not put your money behind a company like Beyond Meat that will be able to satisfy the needs of a global population? Imagine how big this company could be at that time, right? That's how they're being sold Beyond Meat. They're talking about what could this company be, 10, 20 years from now when we're at, $200 billion valuation, or a trillion, That's how they sell these things. That's how they sell these things up there. Kyrie Irving. Oh, yes, Kyrie Irving. Yes. I do remember hearing his name around Beyond Meat. In fact, I think there's a CNBC interview. If you look that up, Kyrie Irving and Beyond Meat. Let's keep it going. Mylan Pharmaceutical Company. Yeah, again, that's another one. Again, not the prettiest chart in the world. Again, we've talked about this over and over again, how to be able to time these bearish entries over and over again, at that 60 RSI. You're trying to get as close to as you can, and how these stocks just can't seem to find their way above there, right? So if you notice, the stock, was relatively stable until it finally was no longer able to get above there and stay above there. So you see here, hey, this is clearly a stock that's headed lower. That's, people don't realize how important getting above 60 RSI and staying above there is important for your stock to continue to go higher. Unfortunately, MYLL, it's not doing that. So very well, getting back higher, right? Trying to find a way to get back up there. Maybe this is the seventh time is the winner. So it's trying, but so far not looking so nice. Here we are with the SPY. All right, and look, I made a Instagram video where I talked about that 60, and sure enough, they fought hard, man. They fought hard, and sure enough, the Trump tweet did it. Hey, things with China are coming together, and he popped us right up. He popped the cherry right above that 60, and let's see if we can stay up there now. We didn't get the cut. We rose on the cut. We didn't get it. But again, we got a lovely statement from the Fed, basically saying we got your back in case shit falls apart, and that's it is what it is. So if you're long, by all means, stay long. If you've watched my video, the only trading strategy you ever need, you've been long since 284.90. I don't have the stomach to do that because I can't sleep at night when I'm long the SPY. But those of you guys who watched that video, that just over the 25 buy, below the 25 sell, and you'd be surprised how well that works in a bull market where these trends would hold for a long time, right? A long time, and they very fail. Not so often, but when they do, it could be very beautiful, and when they work, it's very beautiful as well. So this could very well be another opportunity for us to run for who knows how long. I mean, who knows for how long we could continue to run up that high. Absolutely. Bat, you said you would look at take a 3 to 6 month outlook. We go back to that. Yeah, 3 to 6 month outlook on MYL. Yeah, do some. Yeah, for those who are interested in it. Yeah, do some digging on that. Do some digging on it. If you like it, this would definitely be a solid entry. If that turnaround does happen, this could very well be a solid entry on that. The safe bet would probably be, again, I know many of you guys just aren't comfortable with doing a little bit more creative option plays, but selling the 16 or the 17. I don't know what the options look like, but selling those out of the money puts, if you really believe the turnaround is real, selling those out of the money puts looks a lot better to me than buying a $20 call or buying even an in the money call, because we don't know if it's going to come back down our way. But for right now, it looks very, very healthy. You're at a relatively low RSI level. We know we've hit those upper levels before, so we can run, but obviously it doesn't hold very long. Let me see here. It's December to February. So it was a nice little run there, though. December to February coming off that low. So not bad. Absolutely. But yeah, Bats is right by putting a lot of time on it, because you're going to need it. Because if this is going to really change, it's definitely going to need some time to do that. All right. So yes, ladies and gentlemen, I'll wrap the show up. So, again, the market. We're going to continue to head higher, man. We're going to continue to head higher. Things don't look so bad. The news coming out of, the Europe still looks really bad, but after hours right now, we're looking really, really good. New Zealand GDP was, steady. Not what you'd want to see it, but, it's okay. Okay for now. Bitcoin is at 9,200, still sitting on, cracking 10. Let me see what's got us moving after hours here. So again, continuing that dovish news. They don't have any new news to talk about it, but we're gonna slap that all-time high again soon. And no doubt, in my opinion, create a new all-time high. And let's see how long we stay above that level. I see somebody talking about resistance at 2950. All right. Resistance at 2950. Oh, let me go into SPX here. Okay, so all the way. Okay, I'm not really looking at that right now. I mean, look, we're gonna break through any kind of resistance up there. We'll break through that, unless we just get some really devastating kind of news out there. For a minute there, I thought we were gonna have to get ourselves into a war to get this conversation out. Let me take one look here at the economic calendar to see what is next for us. If any news is coming out. So we got mortgage applications tomorrow. That's going to be negative. I mean, it's already forecasting down 3.4%. So we're going to continue to move higher. So nobody cares. We'll have crude import news tomorrow as well. That's at 10:30. Heating oil, gasoline. That's pretty much it. So we'll see that a couple hours here. Actually, I think, hold on. Jobless claims tomorrow. Initial jobless claims tomorrow as well. What else? Q1. All right, so nothing else new. Nothing else new. Mylan $20 call, October 19. All right, yeah, Bats, if you're putting that kind of time, yeah. I mean, if what Bats is saying right there with that kind of time, October 19th, ask 114, 119. That seems really nice. That's very generous. That's very, very, very generous. At $1.14. But again, Bats, finding people who have that kind of patience, my man, that's just, because you'll have guys who, that thing will go down $1 and they'll sell it and say, oh, fuck it, it didn't work. But let me go out to your Octobers here real quick. Let me just see. All right, so yeah, these options are pretty. They're pretty liquid though. Actually, pretty liquid. Yeah, those not bad for those 20 calls. And even if you went in the money, I mean, if you go in the money, it's not too bad at all either. If you go with the 1750s, let me just look at MYL. You're at 1810. They're at 1810. Let me see here. I'm just trying to check something here on this. All right. Yeah. So even the option selling is interesting too. For about 1700, you make 860 selling the 1750s against the 15s. For 1600, you'll make 860. Interesting. Let's take a look at that real quick. Oh, okay, yeah, when you look at it that way. Let's go for a bit further on the monthly. Oh, it makes even more sense on the monthly. So that's why that 6 month, you got to put in that 6 month. So either way, whether you go with the 20 or even selling out of the money put, still looks really, really good for you to go in that way. Again, put your time on it. What do I think about TNX? When I think about TNX under 2, well, again, when we talk about the, treasuries, it just continues to show how, there's just no love for the short term. There's just no love at all for the short term, and guys are moving, again, to gold. They're moving to, the treasuries with significant more time on them. And I'm not big on explaining this. I should, probably be better explaining it. But again, I just know that when we're seeing this kind of yield, it's just clear that people feel like the short term just doesn't look very healthy, right? It just doesn't look very, very healthy, and they're moving to those longer term notes for security, but more importantly, to commodities to hedge that short term risk. Not pretty at all. And nobody's talking about this as much, Wheezy. Nobody's talking about this as much. They all just want to talk about the good things. Desert Edge, yeah, that's what I mean. Obviously, with this time frame, what Bats is talking about, it's looking good. It's looking good. But yeah, Weezy, this is this is again my concern. It's this is very much my concern. With the fact that nobody really cares. Nobody really cares. The dollar has lost so much value in the marketplace. We've got companies that are leveraged to the tilt, and the short-term debt, is very toxic. It's very toxic, and the continued cut in rates is what's keeping it floating and floating and floating and floating. But eventually, we'll pay for it. We'll pay for it. U.S. dollar wants to go higher despite the gold run. Very strange. Yeah, let's look at the dollar index real quick. DXY. Yeah, here's the dollar index. Ticker is DXY. All right, so this is basically value of the dollar. All right, so you can see here we've had some rough times, some good times, and pulled back a little bit today. Pulled back a little. Oh, this is the monthly. Excuse me. Ooh, let me get out of here. Yeah, pulled back. Yeah, still pulled back today. Last couple days, really. But yeah, I mean, we've been rising ever so slowly anyway. And which some people can explain, as the fact that other countries base their debt in dollars, right? No matter where you go in the world, more than likely their debt is based in denominated in dollars. And wealthy people, when their countries are going through, horrible economic times, they run to buy dollars, right? To get out of their currency and use our currency. So the demand for the dollar is hot, and it always has been, but now even more so. There was an interesting article that came out today where they're talking about in Venezuela right now. Basically, they still have their money, but everybody's using the dollar. It was once something that was banned in Venezuela, but now you can't almost buy anything at a store without U.S. dollars. So the demand is still out there for it. A lot of other macro, concerns play into that as well. But we've created a marketplace where, that MMT theory, and I talked about in the last show, and I'm not going to spend too much time else talking about it, can live. We'll just print, because other people in other countries will take it in. They'll take it in. So oil weakness feeds dollar strength. Absolutely, because, again, many of those countries that are oil-producing countries, they become poor. All right? They become poor. The values of their currency become poor, and things become expensive for them to import from U.S. because many importing also in a lot of countries is done in dollars. It's done in dollars. When a guy from Saudi Arabia wants to import a car, many times when it comes to even other Middle East countries, it's done in dollars, believe it or not. So it's a lot that goes into that. Yes, indeed. All right, so let me get out of here, ladies and gentlemen. I'm going to wrap up the show. I'll be back. We'll see what happens for the rest of the week. But as of right now, we're going to continue to – I don't see anything stopping the rise. In fact, after hours, we're looking really, really solid right now. So, what is today? Wednesday. I give it to the end of the week. Probably bust out of there with a new all-time high. And President Trump will come out with a tweet sometime this weekend because they love to end the week with a great announcement. So I definitely foresee a nice announcement by the administration this coming week to pop us, to get us just up there with a nice 30-point day, maybe on the SPX, to kind of get us above those higher highs. That would be a really nice thing to go into the Sunday night shows about the fact that the market is back to all-time highs. So if it's me, I hate the fact that we're going higher, but you got to be on the side of the price action. You got to be on the side of the price action. And right now, there's nowhere else to go, at least in the short term, but up. All right. So, ladies and gentlemen, I appreciate you. Let me go ahead and let me see. Is this the one I want? I'm trying to get my little outro here. Yes, indeed. Yes, indeed. Hey, all-time highs. Yeah, all-time highs are headed our way. All-time highs are headed our way. I think we can get it this week. I think we can get it this week. I think we can get it this week. So we'll see. But I'm going to focus on the losers. I got some really good articles that I'm still writing. I got one I think I'll get done probably tonight. I think I can fix it. Get it out tonight. Ralph Lauren is this one. It's another company that, again, fundamentals just aren't looking really nice. And Ralph Lauren is a really interesting company because people think it's a legacy brand that can never go away, but I'm not too sure of that. I think it can never go away, at least for the time being, but I don't think that it can hold an $8 billion market cap, especially if it continues to lose money. So I got an interesting article that I'll put out there about Ralph Lauren. With that being said, shout out to Dollar Will, Joe Johnny, Wheezy, Alex Rael, Peter McKeel, appreciate it. So I remind you of Denzel Washington. Okay. But appreciate you, Bad Scientist, man, stopping by. You know how much I appreciate you, bro. Kelly Robb as well. Money Green, guys who've been with me a long time. Appreciate all of you guys. You know who you are. Mr. Cool Millie, Felix Sapini. Who else was in here? KG Black, appreciate you. Bespoke, SSE Trader, appreciate you, man. I'm going to put that video out, too. That's going to be out tomorrow. Dan the Stripe, MMKX56, Ranger Hoistra. He said those sounds were too loud. It's hilarious. Reggie Jackson, appreciate you. Said Ralph Lauren need to drop some new cologne. I'll give it to him. They got good cologne. Ralph Lauren's got good cologne, but again, the market cap's a little ridiculous. But the problem is that they've been surviving on what's been going on in China and the Middle East. See, outside of the United States, everybody wants a piece of America, Americana, right? Having things that are American is a sign of wealth in many developing nations. So Ralph Lauren's been a beneficiary of that, but we're seeing trends starting to turn in that direction as well. All right. And, real quick. IGC, I wrote an article in February on IGC calling it a scam at around $260 or $280 on medium.com. Now look where it is. It's nearly 60% lower from that price than what it was. So I'm happy to be back writing articles again, so I can just kind of have proof that I know what the fuck I'm talking about. Andrew, appreciate you. Money Stay Woke. Who else was in here? Adam Grigas, Curon Network, Life for Business, appreciate you. Anthony Smith, thank you. Johnny, do another episode tomorrow. Like, man, look, it's a lot of information, but I gotta have time to read and study because I love doing that so much. So I need that time to be able to come back and give you guys information. When I go every day, day in and day out, I don't get a chance to read. Then I feel like it becomes repetitive. So it's good to have time to sit back and relax. And plus, you guys know I'm still in school. I got 2 more classes to get this MBA done, and then we're going to start on the PhD program because eventually I want to be a doctor on this shit. You know what I mean? So you guys will be like, oh shit, I'm getting my tickets from a PhD. You know what I mean? Yeah. But anyway, that's all in the future. I don't like to brag about that stuff, but we got things in the works, guys. I appreciate all of you guys for watching and loving this stuff as much as I do. Until next time, it's your boy Sal. See you here on Sunday Trade well. Take care, fam. Bye-bye.